Well, hello everyone. It's January 2nd. Happy New Year's. It's 2020 and we're back. It feels like a Monday. I know it's a Thursday because the week is fragmented, but it feels like a Monday. So let's talk about what's in store for the remainder of this week. We have jobless claims today. Again, the expectation is 223,000 claims. Anything between 200 and 230 is not going to make any difference to the market at all. I believe most of this is priced in. Unemployment has been very low. We've been really in line with the moving average. So anything between 200 and 230 shouldn't really have any impact on the bond market or the financial sector. Friday, tomorrow's a big day. We have FOMC minutes, okay? Now, usually, the minutes are very, very important, but I don't think they're that important now, and I'll tell you why. Let me explain to you why. And I want you guys to pay attention because this is worth its weight in gold. What I'm going to show you is the bond market. This is the long bond. TLT follows the long bond. So if you're looking at the 10-year note, if you're looking at the 30-year bond, this follows it. Now, if you look at the price action, and I explained this last week, but I want to again solidify this for you so you understand exactly what I'm saying. You are seeing right here, let me show you this. This is 9 months of, this is 9 months of price data. The Fed started lowering rates right here. This is where the first rate drop occurred and the bond market rallied like it should. Remember, interest rates and bonds are inverse. So when the Fed lowers rates, follow along, this is important. When the Fed lowers rates, bonds rally. So the Fed lowered rates here, bonds rallied really well, and then they lowered rates again, and bonds should have gone over here, but they didn't. They went south. And then the Fed lowered rates again here, and the bonds didn't even react. So the first time they reacted, the second time they sort of reacted, and the third time, and even the second time, notice interest rates, short-term rates went lower, but long-term rates went south. So here's the Fed, and the Fed is saying lower interest rates, and the short-term rates are going down. But the long-term rates, the rates that you're paying for your mortgage, they're not going down, they're going up. This is the Treasury bond right here. So if this is going down, then the long rate is going up because bonds are going down. They're not going up. So what does this have to do with the FOMC that's coming out tomorrow? What does that have to do with the announcement tomorrow? Well, the fact is bonds are just not reacting to market stimuli right now. Bonds have said basically, we've had it. We're done going higher. So there's very little that the Fed can do right now. There's very little that the Fed can do right now to spruce up the bond market. As a matter of fact, if you look at the weekly data, this is a descending triangle. And it looks to me like we're going to huff and puff around here, maybe congest for another week or so, and then we're going to break lower. So what this is telling me that regardless of what the Fed is doing, the long bond has made up its mind. It has peaked out right around here, right around September, right when the Fed was ready to lower rates again. They lowered rates and bonds did not go higher. They went lower. And this is a classic descending triangle. It's on a weekly time period. So this is why I think the Fed has run out of ammunition. So unless the Fed says something like, we're going to lower rates even if US and China work out their differences. That's something new. That'll cause bonds to rally. But right now, the bond market is assimilating that China and US are going to work things out and that interest rates are going to go higher. Not a lot higher. Remember, we're near historic lows, but it's time for money to become a little bit more expensive. All right? So this is very normal, but because of this, what I'm trying to say is this. The last two times, the Fed lowered rates, the bond market did not react. And therefore, I don't think they're going to react too much at the FOMC meeting, which is going to tell us the data which is going to tell us what they've been thinking over the past month. One thing about this Fed is really transparent. They tell us everything long in advance, which is not really that great because the market gets to assimilate everything long in advance. And they've already told us that if US and China begins to work things out, they're going to start thinking about raising rates. Maybe not immediately, but in the near term. So we already know what's going to happen. We already know that if US and China continue working things out, rates are going higher. They've told us this several times. And if things don't work out, they may have a change of plans. But right now, the way things are looking, US and China are working things out. It looks like we should have a full phase one agreement over the next few weeks. I'll go over global data in just a minute, but it looks like the bond market has had it. So my point is here, I don't think that the Fed can say anything to us over the next 48 hours or 48 hours or so, or 24 hours as of right now. 24 hours and 15 minutes. No, actually, no, it's coming out at 2 o'clock tomorrow. So like say 30 hours. I don't think there's anything that's going to happen over the next 30 hours that's going to make the Fed change their mind, and it's going to change the sentiment that the Fed has built into the bond market on a weekly basis over the past few months, over the past 5 months actually, because this is a strong descending triangle. It's on a weekly basis, and this is basically telling us fundamentally that interest rates have peaked out. Bond prices have peaked out, and interest rates have gone as low as they are going to go. I get confused myself as well, but the only thing you need to remember is this: bonds and interest rates are inverse. When interest rates go up, bonds go down. When bonds go down, interest rates go up. And the Fed has been lowering short-term rates, and bonds are not responding. So I don't think tomorrow's data is going to be very instrumental. Usually I start with global data, but I wanted to talk about the economy because we've got the FOMC tomorrow, and that's a big report. That's the only report that's smaller. The only report that's bigger than the FOMC is the GDP. So you know how important that is. Now, global economy, phase one trade deal calls for U.S. to reduce tariffs. Looks like we're going to be working things out. It looks like it's not looking negative. It doesn't look like there's anything negative. Now, North Korea, it looks like there's going to be a self-imposed suspension of testing nuclear weapons, or at least it looks like it's going that way. And I got to say, one thing about President Trump, he's always had a way with words with North Korea. Him and North Korea have been able to communicate him and Kim have been able to see things eye to eye, which is really bizarre, but hey, what can I say? So China, we're optimistic about China. We're optimistic about North Korea. Also, People's Bank of China said the reserve required ratio, basically, without me reading this, they're going to require less money in the bank. So they're going to boost their economy slightly, all right? It's there's going to be a release of 800 billion yen into the economy for lending purposes. That should spruce up Chinese economy. Chinese economy is the second biggest economy in the world behind US, and that's very positive. Now, let's talk about stocks. Stock market's expected to open up about 0.62%. Not unexpected following New Year's, but here's what you need to know. The level that the market is overbought right now is insane. I mean, insane. Let me give you a perspective. And remember, everything I'm going to show you on the NASDAQ 100 in a few seconds applies to the S&P 500 because those NASDAQ 100 stocks are the biggest stocks in the S&P 500 as well. Amazon, Google, Apple, Facebook, Nvidia, those are the same ones. And what we're looking at is momentum levels. So let me show you what I'm seeing so we can be on the same page. And this is scary here. Yeah, 84% of stocks. 84% of stocks. This is the 50-day moving average on the NASDAQ. And I've been showing this to pretty much anybody who would look. It just looks insane. It's turning now. But again, I've been showing this. This is the highest levels we've been in years, in a decade. As a matter of fact, if you go to weekly, let me go to weekly data. Look at this. It's already curving down and it's starting to come off. And it looks like tech is going to cool off just a bit. I mean, look at this. Every time we breach 90th percentile, we cool off. And if you look at how many times we've done it over the past 5 years, not that many times. That's the 50-day line. That's the short-term indicator. Now, if you look at the 200-day, this is the number of stocks in the NASDAQ 100. It's only 100 stocks. 80 right now, 79.61 to be exact, are trading above the 200-day moving average. And if you go to a 20-year level, you could see that we don't really stay up here very long. Maybe another day or two, maybe another week or so, but the markets are overbought. And if the NASDAQ is overbought, the S&P is grossly overbought as well. And not only is the S&P overbought, it's also diverging, as you could see right here. Let me change the levels here. Notice this price action is going higher. Momentum levels are going lower. So we have severe overbought levels. I mean, look at this. The RSI is at 80. We're grossly overbought. We need to cool off for a few days, maybe a week, maybe even 2 weeks, and then we can continue moving higher. Trump is setting up 2020 to be a great year for the economy. We've got things working out with China. We've got things working out with North Korea. We've got global economy, Chinese economy, and U.S. economy improving. Things are looking positive. Now, I've got something really hot for you, something really special. You guys know I work with Rob Booker. He's a good friend of mine. He's doing something completely and unique. Rob is always doing something completely different and unique, but this is something really cool. He's going to show you, get this is really cool. He's going to show you how to make thousands of dollars in income every Monday morning. All right? So you wake up Monday morning and you've got income that's yours in your account. Couldn't be better, right? It's extremely easy. I mean, super easy. And the odds that you're not taking advantage of the strategy in your portfolio is really high right now. You've got to take advantage of the strategy. The more strategies you have in your portfolio that are different, the key word here is different, the better your drawdown, the less volatility, the less trading range, the less high and lows, the less your account will behave like a roller coaster. So he put together a really short video. The video shows you how ordinary Americans can generate life-changing returns. Get this. You don't have to be an expert trader. 3 clicks. 3 clicks. So it's completely unique. You've got Rob Booker doing it. Rob Booker is one of the best traders I know. He's one of my best buddies, and he's an amazing trader. You're going to learn how to make thousands of dollars in income deposited in your account on Monday. And again, if you think this is complicated, no. 3 clicks. 3 clicks. So we're releasing this. We're doing this now because it's a new year, and Rob wants to show how every ordinary American can change their life with this, all right? All you've got to do is follow the link below. Click the link below. 3 clicks, changing your life, totally unique, ordinary income, Monday morning, deposited in your account. You don't want to miss this, folks. I'm going to be staying tuned for this. It drops now. Follow the link below. Get in on this. Rob is the best guy to teach you how to do this. He's amazing at explaining things, and we've been talking about this for a while. And it's finally that it's time. The strategy sees the time of day. So if you guys want to learn how to generate income that's deposited in your account every Monday, follow the link below. Get with Rob. All right. Talk to you guys soon. Have a great 2020. Talk to you soon.